Would you like to know how you would have predicted the crash on gold on 29th of January? Here's how you would be able to predict big market moves in the market. And this can be applied to any market condition, to any market you are trading. So first we have the important numbers. We have the Fibonacci and the Lucas and the ratios. We have other numbers as well, but we will be focusing on those. Now, as you can see here, we have in the Fibonacci, we have 5, 8, and 13. Now, the last impulse on gold on the weekly chart, last week it was the 13th week on the move. So from here to that week, it was 13, which is a Fibonacci number. Now, during this week, which started on the Monday 26th of January, the only numbers that you can find in this table here are 29. So from 26 until the end of the month, the only number was 29. Okay, so 29 would have been the prime suspect for a reversal. Now we go to the daily chart. On the daily chart, we would look for the last push from the last push that happened based on elliott waves from this here to here, and you will find that we have 20 bars. Okay, now 20 bars in the Fibonacci, you have 20 and 21. Usually the counting starts on these charts, it starts from the second bar, so they don't count the first bar, but sometimes you have to count the first bar. So here we have a confluence. On the weekly chart, we have 13. On the daily chart, we have 20 bars or 21 bars, depending how you count them. And it was a Thursday. Thursday is counted as the fifth day of the week, because usually they start counting Sunday as the first day of the week. And then here you will have like 5 and 21 and 29 and 13. They are all in confluence. Now we go to the hourly chart, and on the hourly chart, what we are looking for, first we change it to a line. This is the 29. Okay, this is the range for the day 29. What we are looking for is a break of structure on the hourly chart. The break of structure, it happened here, as you can see, at 5,536. This break of structure, it also happened during the London Open. So when London opened, it broke the structure here. All right. So what we would expect after this break of structure is a retest. Now the retest happened just before the US Open, but even during the US Open, if you see here, the wick on the chart, we have this is during the US trading session. It just retested the break of the structure and crashed down. Okay. Now, since we are crashing down in the first impulse, we would expect a reaction at the 38.2 Fibonacci level, which is here, 38.2. The first reaction, we would expect it to be here, because if we expect a crash in the market, we would expect an ABC. So this would be an A, and then it would have to react around the 38.2 reversal. Now, it didn't get exactly to the 38.2. Why? Because we had a consolidation here. You can see it on the hourly chart. So we would take the high of the consolidation to be the area where we would close our sell positions. Plus, if you go to the 15, because it was a very big bar, if you go to the 15-minute chart to see this move, you would be able to see, starting from the high to the low, we have, not counting the first one, 1, 2, 3, 4, 5. We have 5 candles going from the top to the bottom. So from here to here, we have 5 candles. As you can see here, this is 5 bars. So 5 bars means we are the first Fibonacci number, 5. So we would have to exit on this one. Okay, this is an exit. This would have been an exit. We would be able to just exit it. Now, the going back in wave B. Now wave B is between always at least 61.8% of the move that happened in A. So always count at least 61.8%. So when it reached the 61.8%, then here you will find something interesting, that how many bars this move had. Okay, so let me show you. This is the info bar. So from here to here, we have 8 bars. As you can see, 8 on the hourly was a Fibonacci number. So from this bar to the top of the move, we had 8 bars. This means 8 and above the 61.8. So B, we can look for it to end and start wave C. Now, for wave C, as you can see, it also had a very big impulse. What we can expect for a wave C is also some number from these numbers. So we have to expect, since wave A was, if we take wave A here, we measure it, it was 16 bars. So we should expect that wave C should be bigger than 16 bars. What is the first number to expect above 16? It's 18. Okay, you can see 18 here. Now, 18, as you can see here, let's just get this out of the way. So here you can see this is the start of wave C, and this is the end of wave C. You can see we have 18 bars. Now, why would we have exited wave C at this level? Because first we have crossed the 61.8, as you can see, and this is the first top of the consolidation after that level. So it just tested it and reacted to it. Follow our free Telegram channel for updates on gold. The link is in the bio.